Let the chaos reign. Chaos Reign presents Is There Tax Free Wealth broadcast January the 9th, 2022. This is the new one to kick off 2022. Enjoy.
The views expressed on Talk Real Solutions, hosted by Tyrone Thompson at TalkRealSolutions.com, are the views of Tyrone Thompson and do not reflect the views of TalkRealSolutions.com, YouTube, or etc. The content here belongs to Talk Real Solutions and its many contributors. Views and opinions expressed by all contributors belong to them and not TalkRealSolutions.com or Tyrone Thompson, the host, or etc. All data and information provided on the site is for informational purposes only. Talk Real Solutions makes no representations as to accuracy, completeness, correctness, suitability, or validity of any information on this site and will not be liable for any errors, omissions, or delays in this information or any losses, injuries, or damages arising from its display or use. All information is provided on an as-is basis.
In a world where there's crime, corruption, violence, murder, rape, theft, and all forms of atrocities that plague the world in which we live in today, what you witnessing, we're living in a state of chaos and taking more greater or extreme chaos to restore the order in which the world we live in today. Hello, black people, and people all across the globe that hears from close to afar and beyond. This is Chaos right here. And today broadcast. To start off, I would say the new year. Actually, the start of the year, 2022, actually. First broadcast of 2022 of the Chaos Reign channel. And as you know, there's going to be things lined up, hopefully, as the year progresses. One of the things I try to do is add more guests and have more conversations of events and things that happen to everybody, everyday person, average or above average person in the world living today. So stay tuned to those broadcasts. They're coming. I'd like everybody to go to talkrealsolutions.com. There you see a 3-point plan for Black empowerment, Black achievement, and under the 3-point plan, you will see a list of Black established banks. I think we have less than 30 banks still existing here in America, maybe less now because of what we're going through right now. But nonetheless, they are located here in the United States. So you'll find that information on the website as well, including the latest news articles and current events that goes around the world on talkrealsolutions.com. So check the website today for all the information, including the donation tab. If you feel inclined to donate to the channel, T.R.S will appreciate it. So check the website for yourself. Also, follow us or follow Talk Real Solutions on Facebook, titled Talk Real Solutions. And once you like the page on Facebook, you'll get invited to the private chat room group where all the things go down in the DM. If you know so, if I speak so myself. And normally the conversation that goes around a DM on the Facebook side of things is pretty hilarious, entertainment, and very stimulating. We drop a lot of information on the DM side of the Facebook page on Talk Real Solutions. So if you like the page, you get invited to that group. What else? I'm trying to go down the list. Oh, and Talk Real Solutions does have a YouTube channel as well. Type in Talk Real Solutions on YouTube. I think it's now at close to 100 subs on the YouTube side of Talk Real Solutions. And there's a lot of videos, live streams, and some new uploads on the YouTube side of Talk Real Solutions. So that information is also there as well. So, you can sub to the channel as well. I have a few of my episodes over there. But mostly my episodes from that channel is also over on the Chaos Reign channel as well. So at times, I have work on both sides. So I'm actually on multiple platforms, to be honest with you. So I'm no stranger to where you can find the president of Chaos Reign. So you'll find me. I think that's it. Yeah, that's pretty much it. So what should I talk about today? Well, if y'all recall, 2 months ago, there was a thing with the government and taxes. Now, they're going to be dipping in on the digital transactions of people using these digital apps and taxing people off these digital apps. And I'm going to probably cover this as much as possible tonight, and also read on the inside of a book that I came across miraculously about taxes. And I'm not going to go through this whole book. I think I'll go for a few pages to get you a snippet of what the book presents. So I would say the title for this stream is titled Taxes. And is there a better way to, or I should call it, taxes? Can you really pay less in taxes or don't pay none at all? I think that will be the title. So, no further ado, we're going to go into it. And make sure you share this stream and like this stream as well. I'm going to go by the little information I see present. And I might play an audio clip of a sense of solution. by a wonderful lady. I'm not giving her name right now, but you'll know once you hear. So let's go into the first few articles. Hold on. The Forbes magazine and the title. And hold on, before I continue, guys, let me make sure everything is running well on both sides. Okay, you know how these things play out. So let's see. Okay, you know how these things. All right, good. So, all right, I'm good. We can go ahead. Let's see. So now, let's look at this Forbes magazine about Texas. And make sure you share it and like the stream. Income tax laws change. What advisors need to know. And this is by Alan Gassman. Is it from him? All right, well, let's go into it. Early this week, the House Ways and Means Committees released an 881 page of a proposal bill that will make many changes to income, estates, and gift taxes. I cover changes to the estate and gift tax system in a early post titled Estate Tax Law Changes. What to do now? With the assistance of my colleague Brandon Kirtman, and now we are back again to cover proposals of income tax changes. As we wait to see what changes will be made in the bill before it can satisfy a majority of us senators and Vice President Harris, or if any sustainable bill will be passed this year. The following is a brief summary of some of the most significant income tax changes, effective dates, as well as though on what to do and what not to do. As the Senate gets involved, all of the following proposals are subject to change, although we should not expect to see anything more than taxpayers unfriendly than as the bill currently stands. Brandon Curtin and I recently presented a free webinar on these new rules. You can view the 6-minute presentation by clicking here for the YouTube replay, which they probably have, which we're going to probably read. We're not going to go by that. Income tax rate increase and rate bracket adjustments. One of the most discussed proposition is the increase in income tax rates, bringing individual tax rates to 39.6% for the ordinary income. This new rate applies to married individuals who file jointly with taxable income covering or over $450K, to head of household with taxable income over $425,000, to unmarried individuals with taxable income over $400K, to married individuals filing separate returns with taxable incomes over $225,000, and to trusts and estate with taxable incomes over $12,500 as an adjustable for inflation in future tax years. In addition to the tax rate increase, the rate bracket will also be adjusted, and those on the upper end of the 32% and 35% rate bracket may see a tax rate increase as a result. This increase will only apply to taxable years beginning after December 31st, 2021, so earn as much as you can while you can at our present historical low rates. Keeping in mind that you may also pay much more in income tax because of the limitations of the 20% section of 199A qualified business deductions, a 3% subcharge on the ultra-high earners, and a 3.8% net investment income tax that will now apply to active business income for high earners. And described below, put together, these changes will have a profound impact on high earners and motivations to keep earning. An ultra-high earner subject to the subcharge could end up with a tax rate of 46.4%. Damn. Hold on. Let me get this, man. That's nearly almost half. Added that the 13% state income tax for a California resident, and the tax rate is close to 60%. 25% capital gain rate. The maximum capital gain and tax would also increase from 20% to 25%. The new rate will be effective for sales that occurs on the after September 13, 2021, and will also apply to qualified dividends. And the present rate of 20% will continue to apply to any gains and loss occurring prior to September 13, 2021, as well as any gains that originate from transactions entering into under binding writers contracts prior to September 13, 2021. Therefore, gains from sales before September 13, 2021 that are reported under the installment methods, even if received after September 13, 2021, will still be taxed at the 20% rate when receiving in the later part of 2021 and in future years, as long as the sales took place before September 13, 2021, or the sales take place on or after September 13, 2021, and was presented to a blinding written contract that was entered into prior to September 13, 2021. Expansions of the 3.8% net investment income tax. As noted above, the 3.8% net investment income tax under Internal Revenue Code Section 1411 would be changed to expand the definition of net investment income to include any income derived in the ordinary courses of business for single filters with greater than $400K in taxable income, $500K for a joint fiber or filter, effective January 1st, 2022 under current laws, and the 3.8% tax general only applies to past investment income, interest, dividends, gains on the scale of stocks, etc. It is noteworthy that the net investment income tax applies to trusts and estate beginning at $3,000.50 of income in 2021, and that the threshold will be slightly higher each year. Therefore, most trusted estates that have ownership of profitable business or ownership interests in profitable entities, taxes as partnership will be subject to the 3.8% tax unless the income received is paid out to beneficiaries, in which events the beneficiary will be subject to tax as if they received it. S corporations, income received by a trust that has made what is called an ESBT, Electric Small Business Trust, elections and taxes at the highest bracket on a K1 income from the S corporation, regardless of the whether it is distributed, and will also be subject to the 3.8% net investment income tax. May trust many sell S corporations ownership interests to beneficiaries who are in lower brackets. Let me pause right there. Hold on a second. Now, to take a little break, that's a lot of consuming. To consume right there. Now, what I probably will be reading after going through this article, I mean, short pages, I found some on another book, and I'll give the title. But when we talk about taxes, we have to understand the history of the tax changes laws in this country, America, for more than almost a century. As you know, that every so-called few decades, they constantly have to change how much there's going to be increase or decrease of the taxes here in America. As you know, our last president, he was able to reduce the tax for most of the corporations, if we want to keep real, to 35% down to 21%. And now we look into 2022, that now they present this because of the amount of money people were making through digital outlets like Venmo, PayPal, Cash App, and all other forms of wire electric transfers to people's apps, phones, other device, etc. And people are making hand over fist under the radar without, let's be honest, being taxed. So as I go further down, we're going to understand how this is going to be now effective now for those who still collecting money that doesn't got like a established business or whatever paperwork they need to do. Let's keep going. Make sure you share this. A new 3% subcharge on high-income individuals, trusted, and estates. Effective January 1st, 2022, a 3% tax will apply on individuals' taxpayers to the extent that they have adjusted gross income AGI in excess of $500,000 to $250,000 if married, filing separately, and on trust and estate income in excess of $100K per trust or estate. Since this tax applies to AGI in excess of the applicant threshold, AGI includes ordinary and capital gains and is not reduced by charitable deductions or any other itemized deductions. The time when this would likely apply to most taxpayers is when a business or other large assets is sold for a large gain. Savvy planners may consider selling to a related party under the installment method to spread out the gains over multiple taxes years. Although this would have to be done more than 2 years prior to the liquidation event to avoid acceleration of the gains when sold to a third party. Planners might also consider transferring interests that may be sold to a charitable remainder trust, which can be used to spread income out over a number of years in order to avoid AGI in excess of the threshold. This is much bigger issue for trust because the tax will apply to trust income in excess of 100K, which will make distribution of this distributable net income (D&I) to reduce a trust remaining taxable income even more important. In overall simplified terms, when a trust makes a distribution of income to a beneficiary, the beneficiary will pay the tax on such income, and the trust will receive a deduction to reduce its taxable income. Formally, the 3% tax will only apply to the extent that income in excess of 100K remains in the trust after taking into account distribution made to the beneficiary. Drafters of trust documents should take a close look at the applicable principles and income acts of status of the trust to confirm whether capital gains are threatened as principal and thus not distributable or income. Most states permit trust documents to specify that a pharmacy will have the power to treat capital gains and income that can be distributed to beneficiaries and escape the additional 3% tax distribution to its beneficiary. Small business will pay more taxes in 2022. Pay attention. Pay attention. Now, I forgot to say during the beginning of the broadcast, you know what T.R.S. always advocate to start a black-owned business? We all know most business in America start out small. They don't really start out as big as we think they do. And knowing this, now in the 21st century, 2022, because of these new little stipulation that's in the tax code now, you're going to be paying more taxes. And like most things, if you pay more taxes in a small business and you're not making no money, I'm not sure that's going to hurt you or better you. Well, let's read on and see what it says. The bill will also change the 21% flat corporate income tax on C corporations to an 18% tax on the company's net income of up to $400K, a 21% tax on net income up to $500K, and a 26% tax on net income in excess of $500K. This is still much lower than what the corporate tax rate were before the 2017 tax cut, and many S corporations will be converted to C corporations, and the act passes, especially given that 3.8% medical or Medicare tax that will be imposed on the S corporation flow through income for high earners. High income individuals who claim the 20%, 1998 deduction for qualifying business income deduction will be disappointed to learn about the proposed maximum deductions of $500K for a joint return and $400K for individual return and $250K for a married individual filing a separate return and $10K for a trust or estate. This is addition to the permanent removal of excess business loss for non-corporate taxpayers. Okay. All the affirmations business tax change will be effective after December 31st, 2021. Let's go down. The IRS versus the IRS versus nearly, looks like 10 million IRA pension holders. In efforts to combat the hordes of assets in massive IRA accounts, those who hold a Roth and traditional IRA and retirement plan account with the combined balance that exceeds 10 million as of the end of the taxable year may not make further contribution if the account holder has taxable income over $400K or married taxpayer filing joints with taxable income over $450K. The large amount holders will be required to make a minimum distribution equal to 50% of the amount by which the individual prior years aggregates traditional IRAs, Roth IRAs, and defined contribution accounts balance exceeding the 10 million limit. Even more extreme treatments will apply to those who have over 20K. No, actually 2 million. My fault. And combined accounts. That's like another zero. Is it 20 million? Okay. No, actually, my fault. It's 20 million. My fault. 20 million. Yeah, that's an extra zero. So it's 20 million combined accounts. Hold on. All right, let's keep going. Furthermore, a loophole that allows indirect findings of Roth IRAs by the backdoor Roth technique could be eliminated for high earners. Okay. What about charity? Charitable gifts does not seem to be impact except for what we call garnered charitable lead annuity trust or annuity trust. Grantor charitable leading annuity trusts. And with higher income tax brackets, charity may receive more in donation, which would be good for charitable cause and those who work for charities. It may be time to set up the family foundation you have been considering and get it funded if you will be a high earner next year. Okay. The use of charitable reminders trusts will be important, popular to the spread of large gains over the multiple tax years. In order to avoid cross-applicable income thresholds, that being said, some of the new provisions are applied based on adjusted gross income AGI thresholds, and since AGI is determined prior to deduction for charitable contributions or any other itemized deductions, large charitable donations will not prevent taxpayers from being subject to some of the new taxes or high earners. Malicious changes. Other changes proposed change in the bill that are noteworthy, including the following. The 100% gains exclusive on the sale of Section 1202 qualified small business stocks will be limited to 50% of the gains for taxpayers with AGI exceeding $400K unless a blind or binding contract was entered into prior to September 13, 2021. Cryptocurrency, Bitcoin, Ethereum, Doji, etc. will be subject to the constructive and wash sales rules as of January 1st, 2022. So if your cryptocurrency went to the moon and you went to lock in an offsetting position without triggering gains, do so before the end of the year. If you were less fortunate and get caught holding the bag, forget having Diamondbacks. You now have until the end of the year to sell your coins to harvest the loss and immediately buy back in. You would be in the same position economically, but with the added benefit of being able to recognize the loss of offset other passive incomes. This type of planning is prevented for most, if not all, other marketable securities, and somehow cryptocurrency has managed to stay under the radar until now. So going back to cryptocurrency, as you know, they're now watching it, and they do want their money from cryptocurrency. And this was always in the making because, let's be honest, people, for the last 5 years, roughly around 2016, cryptocurrency has been fluctuating, especially Bitcoin. It started off as a cent back in 2010, and it blew from a cent to 5K, 10K, to now, if I'm looking through my phone, and let's look how much a Bitcoin is now. Bitcoin right now, as it stands, and I'll give you the numbers of what the coins are now, since I'm talking to you. Give me a second. Bitcoin, as it says right now, is roughly, it's still loading up. Okay. I'm trying to find it. Sorry, guys. I'm trying to find what are the coins now. Oh, here's. I found it. All right, Bitcoin right now, as it stands, is roughly the coin is 41K. And Ethereum is roughly 3,000. XRP is roughly 75 cents. Bitcoin Cash, $374. And Litecoin is $130. And what other coins? Let's see all the other coins. All the other coins is Dogecoin, 15 cents. Shibata is, I think, is less than 28 cents. And the Bounce token, $20, and so on. Oh, here's a giveaway secret. The United States does have a digital coin. They're not unveiling that yet, but you could invest in the United States coin, the USD coin. It's running right now as a digital currency as $1. And there's a reason why that is, because as physical is starting to fade out, and they're making away with systems now because of the situation we have right now. And less people are using physical cash, which I always advocate most people should still have the cash indisposable, because, way how things are being moving around, you always want to have cash. Regardless is a depleted resource, the physical currency. But I digress. Let's keep going. The IRA can no longer invest in entities in which the IRA owns has a 10% or greater ownership interest. This is pressable 50%, or if the IRA owner is an officer. This will also be considered an IRA requirement rather than a prohibited transaction, which means that if the IRA invests even a small part of its holdings in such a business, the entire IRA will be disqualified, resulting in loss of creditors' protections status and having tax apply as if the IRA was liquidated. There is a proposed 2 years transaction prior to of an IRA currently invested in these type of investments. The IRA will receive approximately, it will receive roughly, let's look at the zeros, 1, 2, 3, 4, $80 billion to enforce the tax law and presumably audit many more taxpayers and bring in much more in tax revenue. The IRS, especially. The employer tax credit for wages paid to employees during families and medical leaves will expire in 2023. 2025, under present law, the S Corporation, the elected S Corp status prior to May 13, 1996, will be permitted to convert tax-free to a partnership anytime in 2 years following passage of the Act. Under present law, this would result in deemed taxable sales of all of the assets of the S Corporation at the time of conversion, so this will be a very good opportunity for many taxpayers. An S Corporation can generally convert tax-free into a C Corporation, but C Corporations are not a flexible with respect to the distribution of allocation of income as an entity taxed as a partnership. This will be an alternative for S Corporations owners who wish to have greater flexibility and do not expect that the ability to have a significant income excluded from the net investment, including tax, will come back anytime soon. There are many changes to internalized taxation that are better left to be internalized or internationally tax experts to explain. Those who deal with tax-related stress by smoking tobacco products will be sad to hear of the proposed double of the excess tax on cigarettes, small cigarettes, and roll your own tobacco, in addition to several other new imposed nicotine tax not covered by this article. So you're going to be, if you like to smoke, you're going to expect the price to go up because you're going to be taxed. Tax is going high on cigarettes. all forms of cigarettes. Keep that in mind. Yeah, that's a lot. That's a lot reading here, but I don't mind it. And for those who have a small business, have an S or C corp, if you feel inclined, you should call in. And let me give the number for the call-in show since I'm up here. I forgot to say this. The number for tonight's show is 717-908-1834. I repeat, 717-908-1834. The access code is 917-324-pound. I repeat, 717-908-1834. Access code 917-324-pound. And this is focused on today's show. We're dealing with the taxes, how to avoid or pay less tax. Let's go down. Planning to plan. Once we have all of the affirmations in mind, we can begin to plan while also recognizing that what actually occurs is likely to change. Here are some examples of planning moves that may be considered at this time. Number one, if you have an estate plan in progress, get it done as soon as possible. Number two, charitable individuals who are over the age of 59 through 1.5 with a large IRA may wish to consider withdrawing moons from their IRA and giving those moons to charity. A IRA distribution rules are changed for the worse, and to receive dollars for dollars, charitable deductions that is permitted this year and may not be allowed in the future until 2022. Only taxpayers over the age of 70.5 can transfer IRA moons to charity on a tax-free basis, and were limited to $100K per year. Accelerating income into year 2021, quite likely, like 2021 tax rate will be much lower than 2022, and this will hopefully apply to the entire tax year. That being the case, cash methods taxpayers may accelerate income by transferring accounts receivable in the late December so that they become taxable, and may wish to defer the payments and expense until 2022. It is important to remember that there are advisors and others who stand to gain economically by making recommendations and implementation change that may backfire on their clients. So caution is advised. For many individuals and families, that best thing to do is get all of your information and documents organized and to see a reputable tax advisor in order to be further up in line to get properly positioned once changed or if they are ratified. The following summary may help, and there's a summary picture of all the proposals, the increase, etc., which I'm going to put on my page on my channel for y'all to look at. The coming months will undoubtedly see plenty of people concerned about protecting their income and assets from taxation. This will spur taxpayers across the country to reallocate themselves with their estate plan and CPA, and motivating people to schedule their annual financial checkups. Forbes cryptocurrency tax webcast getting in depth and blah blah blah. And this was posted on September 21st at 2:30 p.m. This was like last year. Okay, that's it. I'll probably leave this. Let me copy this and post it somewhere so I can keep that around. Let me see. I'll put this here. So that was a lot to digest. For the summary of that and moral story, make sure your paperwork is on point. for this year because, it can't hurt you in the long run. But anyway, now, before I open this book and start off with a few pages here and there, I'm trying to see where I'm going to start off with this. Yeah, I probably will. I'm trying to see how far I'm going to read up to here. Okay. All right, so let me look at the chat room, the call line. See anybody raise their hand? Okay, no one has raised their hand, so it looks like y'all listening, which is a good sign. Okay. All right, let's move. Let's keep moving forward. Now, and I probably will give the name of the book, possibly. We'll see how it goes. Oh, this is good. All right. Major tax reform and what it means to you after 31 years. True overhaul of the tax law only happens about once every 30 years. In the past 75 years, the U.S. tax law has only seen 3 major revisions, one in 1954, the next in 1986, and the most recent at the end of 2017, which is roughly now 5 years ago. I have been fortunate as a tax professional to be heavily involved in the last 2 reforms. That was roughly in 86 to 2017. I was a manager in the National Tax Department, NTD, of Ernest and Whitney, now Ernest Young. My primary responsibility during my 3 years there was to create, teach, and administer tax courses to the firm U.S. tax professionals just as I arrived in the summer of 1985. I discovered that much of the NTD resource were being devoted to following the tax reform bill that had been introduced that year. This gave me, as a young tax professional, some amazing insight into the legislative process as well as the horse trading for tax reform. President Reagan wanted 2 things simplified in 1985. The act was called the Simplification Act of 1985. And let me take this off for a second, guys. And he wanted it to be revenue neutral, no net income or net increase to the deficit. It took another year before the bill was finally passed as the Tax Reform Act of 1986 simplicity took a backseat to other goals. Okay. Where was I? Okay. To other goals of the reform. In 1986, the big winner from tax reform were individuals with significant lower tax rates, insurance companies who got by relatively unscathed or unscathed, and businesses. The big losers was real estate investors. The passive loss rule were used as a last-ditch effort to make a revenue-neutral bill that results in a few years later was the savings and loan debacles, accompanied by a massive real estate depression and other government bailing out real estate through the RTC Resolution Trust Company or Corporation. It's interesting. Let me get this. Yeah. And fast forward 31 years later, in 2017, President Trump had promised economic stimulus and had stumbled out off the block with the failure to repeal Obamacare. Everyone thought tax reform would take 2 years to complete, like it had in 1985 through 1986. Instead, the Republican-controlled Congress was able to use slick procedural rules to pass major tax reform in record time, less than 3 months from start to finish. So to recap, back in the 80s, it took them roughly a few months. Actually, it took them a year or 2 years to complete. But when this administration came, like Trump and Republicans hold most of the seat, they did this in less than a month or less than 2-3 months. I find it interesting. But anyway, the result was the bill to consequently of which the application of which are still large unknown. Known are the clear winners and losers. Losers include employees with loss deductions for moving, investment expenses, and reduction of in-home mortgage interest and state income tax deductions. Winners include big corporations with a majority tax reduction from 35% to 21%. And small business with a 20% net income deduction, and a real estate with a major depreciation incentives, and a 20% net income deduction given to other small business. The key to remember is that very few people had the chance to influence the legislation. Everyone has the same chance to take advantage of the windfall given to the winner. Employees can choose to be independent contractors and receive the 20% small business deduction. Service profession who were left out of the 20% deduction can now become a C corporation and reduce their tax rate to 21%. Investors who receive tax benefits from the cost of investing in the stock market can either begin investing in real estate with its massive tax benefit share, or invest through their Roth IRA and Roth 401k and avoid tax altogether on the income and gains from their investment. Tax-free wealth is about using the tax law the way it's meant to be used. And let's pause right there. This section, where I'm going at now, is dealing with so-called gaining wealth from taxes, or tax-free wealth, so that people that know what I'm reading. As a series of incentives do what the government wants you to do, this second edition incorporates some ideas of how to use the new incentive, and the reality is that the incentive don't really change that much. The government still wants business to hire employees, so business receive tax benefit for doing so. The government still wants investors to provide housing for renters, even more so now. So real estate investors receive large tax breaks for following through on the government's goal. You get that? Energy is still favored, both traditional energy, oil, gas, and coal. The renewable energy, wind, solar, and hydroelectricity. So let me recap. If you do these three things, meaning you provide, you create business, and hire employees. You buy and rent house, own a home or rent to somebody. And also invest in energy, gold. These are things that the government would love for you to do if you are trying to get a nice little deduction on your taxes. Keep that in mind. Just keep that in mind. Let's keep going. For U.S. taxpayers, you will find helpful tips in this new edition to help you apply the new tax incentive to your situation. As a bonus, I have included information and links to blah, 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 blah. Let me go down. And it says here, hold on. For you who lives outside the United States, and no matter what country you live in, the addition should help you look for ways to apply the government incentive. You may even decide that you know it's time to do business in the United States as the country as at some degree as a tax haven. You can take advantage of the tax incentive offered by your government only if you understand how the tax law works. Every day you have the opportunity to reduce your taxes. Once you have digest this particular piece I'm reading to you, and take into your tax advisor, you have then read it. It's better yet to buy them their own. Well, I'm not going to go there. Let's go down. All right, I'm going to go move forward on. Let's see if anybody raised their hand. Nope, nobody's raised their hand. They're still listening. Good. I'll give them the call number again. The call number for tonight's show is 717-908-1834. Access code 917-324-pound. I repeat, 717-908-1834. Access code 917-324-pound. Today we're going to look at taxes. How to not pay or to reduce your taxes. Tax-free type money, etc. It is not easy to write a book about taxes that appeals to the average Joe. Most people are scared to death of taxes. I know a few people, content creators that have very large channels talk about taxes. I know one black woman on YouTube as well talking about she don't pay no taxes and she knows loophole. So it lets me know, saying, as a man, should you be paying taxes? Well, if you know the games or understand the language of it, you have to find that information out yourself. And trust me, there are people out there that have got under the radar and have not paid no taxes. So don't think that doesn't exist. Let y'all know that right now. But anyway, that's not the purpose. Because most people are law-abiding citizens, and they don't want Uncle Sam to come dip in their pockets, and they're afraid of them coming in putting handcuffs. I would advise you scary people, pay your fucking taxes and know how to pay them properly. Let's go on. Most people are scared to death of taxes. They believe that the tax laws is out to get them, which it is. They say, oh, you owe us $5,000. What? Yes, you got to pay up, or it's going to increase. Oh, now we're going to take you to jail. Oh, we're going to take something since you owe this much. Oh, you owe us this. You owe us that. Oh. You hear the notion when they find out that they were filing the paperwork and notice they owe. It's such a depressing matter, don't you think? Anyway, for years and years, the media and so-called financial advisors have told us that the tax laws is far too complex for most people to understand. What these groups are not telling you is that the tax law is actually pretty simple. Yes, there are many details, and you need a good tax advisor to help you sort them out. Still, the fundamental concept of the tax laws are easily understood by anyone with a 5th grade education. Hear that? Are you smarter than a 5th grade? And you know it's funny, since we're talking about education, have you noticed most males, black males, even today, present day, still can't read beyond third grade reading level. So you always got to keep in mind, why are you restricting human beings? On the average, if we really do the data and we just Google it, I guarantee most people in America, besides our communities, the average reading level, grade reading level, is roughly around sixth grade reading level. So they made it in a way where you can't understand this from that perspective of elementary school. But like I said, if you as a male, black male, you can't get past the third grade reading level, this might be a problem for you. Possibly. But anyway, let's keep going. Of course, the tax laws were not initially intended to even include the average working man and woman. They were meant to teach, or actually meant to reach only the excess earning of the most wealthy individuals and corporations. Over the past several decades, however, they have evolved to becoming tools of social and economic policy making. When the tax laws were first imposed on employees, an average employee earning the average wage was exempt from tax. Let's read that again. When the tax laws were first imposed on employees, an average employee earns the average wage was exempt from tax. Now, employees pay the highest tax, and employers and investors pay the lowest. See how that changed? But let's keep reading on. Why? Why is the question? Why is you the person that works your 9 to 5, you pay more tax than the people that run the corporations or investors? Economically, policies makers and government discovered that people respond quickly and directly to tax incentives. So if you want to encourage big families, you give a tax credit for each child. If you want to encourage investment in domestic oil production, you give a big tax deduction for every dollar invested in oil and gas. If you want to encourage investors to build apartments for low-income workers, you simply give them a credit for doing so. And it goes on and on and on and on. Okay, so I'm gonna move that aside. And then in this same book, it's not what they call criticizing of the world tax laws or even a recommendation that they change. Tax are part of our world and will always be part of our lives till the end of time. So instead of complaining about them and hoping for Parliament and legislators to make them fairly, let's simply understand them and put them to good use in our lives, and good use in a good way. Taxes will either make you rich or make you poor. Let me read that one more time. Read that one more time because y'all not hearing that sentence. Y'all not hearing that sentence. I'm trying to. My phone not working. Alright. Taxes will either make you rich or make you poor. Taxes will either make you rich or make you poor. Now, why it said that in the first sentence? Because let's be honest, the people that knows the tax law and know the rules that are already rich or have these corporations are actually getting richer, while you as the working person that just pay your simple tax, you're actually getting poorer and poorer, unfortunately. And that's just the honest truth. Let's keep going. The tax law of all countries are written to encourage certain activities that benefit the economy and promote social policies. It is our job to understand and take advantage of the tax laws as they are written. This book is not about loopholes. Loopholes are unattainable consequence of laws that were enacted, or unintended laws enacted. This book is about the consequence that lawmakers extended, taking advantage of the intended benefits as doing what our government asks us to do. Hold on. Take advantage of the intended benefits is doing what our government asks us to do. Invest where they said to invest, and you get a tax benefit. Put your time and talent into activities that produce jobs, housing, and growth of the economy, and you get tax benefit. And in many ways, utilizing the tax code to the fullest to save as much money in tax as possible is one of the most patriarchal things you can do. Again, the concept of tax laws are not difficult to understand. While this book will not make you an expert in your country, tax laws, it will teach you the fundamental principles of those laws so that you can take advantage of them in a way your government wants. And in doing so, chances are that you will become more profitable in your business and in investing. After all, the tax law is really a map of treasure maps, and you follow this treasure map, your taxes go down, and your profits and investment returns go up, 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 up. Enjoy the treasures hunt, and you will find that you will have more money and pay less taxes. And let me see if I'm going further in. I'm trying to see if I'm going to read this. This one from Robert Kiyosaki. I'm not reading that. All right. All right, so let's go further. I'm going to read this. Over the years, I lost a lot of money to taxes simply because I had high-priced, well-educated CPA who were not the brightest match in the box. That is until I met with Mr. Wheelwright. For years now, Mr. Wheelwright has been my guided light, allowing me to do what I do best, which is build business, invest, create jobs, and make money, all while paying less and less and less tax legally. I encourage Mr. Wheelwright to write this most important book, especially at the time in history. I'm glad that I'm here, and I trust you enjoy and learn from it. Today's taxes are killing many people financially. Perhaps you know what I mean. Do you look at your paycheck every month and wonder where all your money is going? I'll tell you, it's going to the people who know how to use taxes to make money rather than lose money. It's going to people like me, which is the guy that is one of the founders of the guy that wrote this book. And the reason I'm not giving the name, because I want y'all to follow the rabbit hole and follow the information. Because following the information will probably help them to knowing what the book itself. And let's be honest, most people that will listen to this are not going to purchase and buy this book. So I just want to give you a little snippets what's in the book. For you to, if you like it or want to know more about it, like always, you will leave a comment into the Chaos Range channel if you want to know the actual book. If you are dying to know what it is to possibly buy. Let's keep going. All right. Oh, and I do agree with this paragraph that the taxes are killing people. And one thing you must understand, one of the greatest robbers of wealth is taxation. And now in the 21st century, they are now proving more evident that they're going to tax you even harder. So every dollar you spend, you give Uncle Sam 21 or 28% of that. Keep that in mind. As you'll find out more in this book, governments write the tax codes and incentives investors and entrepreneurs to behave how they want. So if the government wants more affordable housing, they'll provide some great tax incentive and motivate developers to build affordable housing. The problem is that the government still have to pay their bills. So whom do they tax? The middle class. Who do they tax? The middle class. Who do they tax? The middle class. So who do they tax? The middle, not the lower, not the upper, right in the middle side, the middle class. And that is very understatement to really have an understanding that if you are middle class, which most majority of Americans are still fighting and still struggling to maintain, you will be, and I mean will be billed the hardest, and you will be taxed the hardest if you are in the middle. Now, mind you, if you want to go even deeper, isn't middle average? Isn't most people in the world, or are we talking about America, average? Isn't 35 or greater middle class average? It's something to really reflect and think about hard. Anyway, let's keep going. And they use these taxes to subsidize people like me who behave how they want in order to get tax breaks. As you know, today there is a growing outcry to tax the rich. Many believe the rich are tax cheats and ripping off the poor and middle class, and some are. As long as taxes exist, there will be tax cheats, and not all of them are rich. The poor and middle class have their fair share of tax cheats. We all know there is a large underground tax-free economy in every city of the world, all filled with tax cheats. You probably know some of these people. Mr. Willwright book will give you the different perspective of taxes. He sees tax and government incentives, economic stimulus to keep the wheels of the economy greased and moving. This is how my so-called dad saw taxes. He simply saw himself doing that the government wants done, and in return the government affords him that tax break. All right, let me go down. And last section, if you want to earn more and pay less in taxes by doing what the government wants and need done, however, this is the book for you by Mr. Capitalist Kawasaki. All right, now, I'm going to give you a rundown of the man. And then after this, I'm going to play the audio, and then I'm going to check if anybody has any questions. Let me see if I'm going to read this. All right, I'm going to skip through this. because I probably will have y'all, if y'all interested, y'all could hit me up if y'all want to know what this book is. To be sure in detail, or actually, let me start this. How I wrote a book on taxes that applies to every entrepreneur and investor in every country. I know the U.S. tax law very well. I've been studying it for 35 years. But like everyone else, I know that the tax law of other countries would be quite different than U.S. law. My research reveals something entirely different. It turns out that the tax laws in all developing are similar. They are so similar, in fact, that a book could be written that applies to entrepreneurs and investors around the world. This is that book. To the sure, the details of the tax law are differently in each country, and we will like a specific tax strategy you can use in your country. At the end of each chapter, but unless you are a tax professional, you, the entrepreneur and or investor, don't need to know all of the details. You can leave these to your tax advisor. You have to know the concept, and the concept are the same regardless of your country of origin or the country in which you do business. This book is about tax planning concepts. It's about how to use your country's tax law to your benefit in this book. I'll tell you and how the tax laws work. Hold on. Okay. Hold on. Let's check something. And how they are designed to reduce your taxes, not to increase your taxes. Once you understand the basic principles, you no longer have to be afraid of the tax law. They are there to help you and your business and not to hinder you. Once you understand the basic principle of tax reduction, you can begin immediately reducing your tax. Eventually, you may even be able to legally eliminate your income tax and to drastically reduce your other taxes. Once you do that, you can live a life of a tax-free wealth, etc. And let's get started. So now, that's the section of the book I was going to read. I ain't going to go longer with that book. And anybody asks, I might not say what the name of the book is yet, but nonetheless, I have one caller, which I'll open the line now. And remember, the call number for tonight's show is 717-908-1834, access code 917324#. Tonight we talk about the taxes, loopholes, pay less or no pay no tax, whatever you want to call it. First caller, call up your line. Who's this?
Good evening. This is Adwa.
Mm-hmm.
How are you?
I'm good.
Good. I want to ask you a question.
Mm-hmm.
From your share this evening on the taxes,
Mm-hmm.
the perspective is that the tax system is equal across the board, would you say?
What I've read, hold on, is that the tax laws in not only in America but outside America are almost actually the same.
Okay.
Which is not surprising, because one thing with most governments, if they're following a Western model, if they're all following taxes which they got from Europe, because we all know the history of taxation is really a Roman type of thing from centuries, that it has evolved up to this point, and most people that either speak English or follow certain currencies or adopt certain things from the West, Eurocentric stuff, they adopted the same tax codes. You get me? So when we talk about taxes, one thing the government always advise, and we do advise, if people really pay attention, is you have to put in something to get something. That means they want you to still keep this economy going, which build infrastructure, jobs, and look for materials, etc. That's where they give you the biggest tax breaks. You know what I'm saying? And that means, buying houses, or some people fixing affordable houses, That's a reduction. What about I say? Creating business, employing people, like either like small business that become bigger business, like a Walmart. I think supermarkets. I'm just naming, and probably some wholesale, like a Home Depot. You know those type of jobs that people need, and you employ people for a need. Those are things that give the biggest incentives and tax breaks. You know, so that's something laying out Lady Ottawa. Yeah. So.
All right.
Oh, and also I forgot. Also getting raw material, like invest in oil, silver, electricity, and all that stuff. Put money into those things too. Yeah. So yeah.
Well, I just wanted to share with you that I just purchased a book. It's called The Whiteness of Wealth. And this book is written by melanated woman. Her name is Dorothy A. Brown. And in her book it says this is a groundbreaking expose of racism in the American taxation system from a law professor and an expert on tax policies. Now, Dorothy Brown has been a tax lawyer for over 40 years, and so she has written this book to help black people specifically understand this tax system because there are a lot of inequities. And in the tax system, we really don't have a real understanding of what is taking place when we pay taxes. And so this book is to assist us on how we can fix it, because we think that marriage also, you know, when we get married, that we'll be able to generate more wealth. And when it comes time for filing your taxes at the end of the year and you follow jointly, your return is less, and you would think it would be greater. And so what's the
book called again? What's the book called again?
Just one second, I'll tell you. We have to study the law, not just tax laws, but the law in general. We need to know the law so that we can make better decisions. The title of the book is The Whiteness of Wealth by Dorothy A. Brown. And I just wanted to share that.
Whiteness of wealth. I'm looking it up on YouTube right now. Oh, they got audiobook of it too. Oh, I see her. It's a lady with glasses. You seen her? Okay. And you read the book already?
I'm reading it now.
Okay, she has an audiobook. The what? Okay, all right, good. All right, thank you, lady. All right, thank you. Appreciate it. Audiobook. Let me All right. So let me see if I can find another caller, guys. All right, no one else raised their hand. Okay, so now let's see if we could look into to go back to in regards to what to do in regards to people getting payments digitally through PayPal, Venmo, and Cash App. What solutions you could take? Well, I found a nice, wonderful lady. I think her name is Kez, maybe. And she gives a little insight and some clues and things that you could do if you're going to be getting payments through that, and what to do so you don't have to worry about or concern about the IRS. So I'm going to play that now, and I think that possibly might be it, but we'll see. So listen closely.
Man, listen. Today we're going to talk about how you can avoid paying taxes when you use apps like PayPal, Venmo, Zelle, Cash App, and even Uber and eBay, actually included. Now, before we get started, I want you to kiss the like button with your finger and hit subscribe. We're trying to reach 250,000 subscribers. subscribers by the end of the year. Now, without further ado, let's get started. Starting January 1st, 2022, third-party settlement organizations are required to report when users receive over $600 in payments for goods and services. TSOs, as they are called, include organizations like this. If you are transacting virtually, these apps are going to track if you receive up to or above a certain amount, and they will send you a tax form, and that same tax form will be shared with the IRS. So the payments that you send electronically to your nail tech, your barber, your hairstylist, your lash girl, your lawn guy, or to that eBay user who you sold Aunt KK's ugly lamp to for $25, and also your maintenance man, all of these transactions, if they amount to $600 or more, have to be reported to the IRS by TSOs, and the TSOs have to send you paperwork, the 1099-K, so you can report that income for yourself.
So you see, I always hear it says 500. No, it's 600. Now, mind you, they might extend it or make that a little bit greater. But you always got to keep in mind that why it's only roughly 600. They want you to start. They're tracking something that 600 that's either given to you or you're transferring wherever. In my opinion, why they do it, because they look at the average right now. Most Americans don't have like $1,000 or $600 in their savings account. So 600 is actually a benchmark of everything, because they know what you cannot keep, which is roughly that. So that's what they came up with, that number. But let's keep playing on. Listen in.
Legislation that made this a mandate was passed through the American Rescue Plan Act of 2021. Yes, your president, Joe Biden, said that every business owner needed to pay their fair share. And folks across the internet were absolutely upset. I mean, y'all were advocating on Instagram and TikTok and YouTube and to your legislators. And finally, President Joe Biden said, I hear you. Maybe $600 is too low. Maybe we should raise it to $10,000. And the Department of Treasury agreed. Now, there's new legislation being proposed, and this is going to go inside of the Democrats' reconciliation spending bill. But until this bill is passed, which would raise the threshold from $600 to $10,000, right now the TSOs have to follow the rules that are in place and took effect January 1st, 2022. And those rules simply say if you receive over $600 in payments for goods or services, they will report that to the IRS and send you a tax form 1099-K so that you can also report that income to the Internal Revenue Service. Now, the purpose of this video is to teach you 3 ways to get around this rule, legitimately and also legally, because we don't want any of you all going to where? To jail. So number 1, choose family and friends. So TSOs are going to give you the option to choose if you're paying a friend or family member, or if you're paying for goods and services. This option is going to be available for you to select on every single transaction in which you are involved. Payments to friends and family may include reimbursing them, or perhaps you're out to eat and you're splitting the check, so you're sending them your portion of the check. Payments to friends and family may be a gift. It may be a payment for chores. You may be trying to give your college student or somebody that you know in higher education, maybe even somebody you know in high school, just a little change, because they've done some great things in school. All of these things are considered payments to friends and family and not payments for goods and services. Speaking of goods and services, this happens when you're making a purchase to acquire an item or also to acquire service from an entrepreneur or an entrepreneurial person. So this, for example, may look like paying the lawn guy to cut your grass or even shovel your snow, or specifically paying someone for a ride to and from via the ride app Uber or even Lyft. So I know some of you all may be thinking, well, what if I pay my friend or family $10,000. So let's say that you receive $10,000 in gifts because your family and friends, they just love you so much. You're such a lovable person. Well, let's talk about the tax law regarding that. In 2022, you can gift GIFT up to $16,000 to a family or to a friend. All right? Once you gift more than $16,000, then you, as a giver, as a gifter, will be taxed. Okay? So if someone gifts you $10,000 or you were gifted $10,000, then that's still below that $16,000 threshold. Now, you should still be prepared for the TSOs to be monitoring your inflows and also your outflows. So you want to be able to justify that that payment was indeed a gift. Let's go on to number 2. You can totally skip this option if you sold a good at a loss. Now, here's an example. Let's say that you're hosting a garage sale and you're walking around your house. You're seeing 15 chairs, you only need 2. You're seeing 17 tables, you only need 1. You're seeing 500 books, but you know that you only read on Kindle. And you're saying, listen, this stuff has to go out onto the garage sale because it can no longer be in my house. You are queen or king of decluttering. So you host a garage sale and you sell all of your items and people actually pay you cash for them. Guess what? This would not be considered income because normally when people host garage sales, they're selling their items at a loss. So let's say you had a pair of Bobos and you paid $25 for those Bobos, but at the garage sale you sold them for $5. That is a $20 loss. And the IRS does not count losses like they count income. Now the same holds true for eBay because a lot of individuals will use marketplaces like eBay and even Amazon to sell used products in their home at a value less than what they purchased them. So this is another way for you to get around, right? For you to tiptoe around this particular tax law in a legitimate way that won't send you where? To jail. Number 3, you need to document your tax write-offs. Now listen, if you are an employee or an individual, you do have tax write-offs available to you, but it's only like a handful, right? You have charity, you have some medical expenses or moving expenses, potentially, that you can write off. But if you are a business owner, you have 400 plus tax write-offs and tax benefits that are available to you. That's why I always like to teach that the tax code was set up for owners to win and employees to pay. So whether you own an LLC or an LLP or a C Corp or an S Corp, or maybe you're operating as a sole proprietor, which means that you're just transacting business. People are paying you for goods or services and you're receiving that cash hand over fist. That means that during tax time, you have access to these 400 tax write-offs and tax benefits, which are designed to decrease your taxable income. Here's how to make this practical to what you understand right now. A billionaire that used to be your president of the United States, Donald Trump, paid $750 in taxes. Amazon. That is a corporation that you probably use today. There's probably 5 Amazon boxes sitting on your porch right now. You haven't picked them up because you don't want your husband or your wife to side-eye you. Amazon paid nothing in taxes. And it's because they have a great tax professional that was able to look at their business income and also qualify legitimate business losses that reduce the amount of taxes that they owed to a little amount or no amount at all. And you don't need an experienced tax professional to help you do that. There are affordable accountants maybe in your neighborhood, and there's also tax software, kind of like TurboTax, which helps you find those write-offs for yourself. So for example, let's say you made $10,001, right? You had people paying you through Cash App for your really good or your really great service. So you made $10,001. Let's maybe review some of the tax write-offs that may be available to you. Maybe it's business mileage. right? You drove to and from in order to sell your item. It could be your home office. This is where you marketed your product. It could be software that you use. Maybe you were on Wix. Maybe you were on Shopify. It could be business meals. Maybe you sat down and you broke bread and you told them what a great entrepreneur or entrepreneurial person that you are. Maybe it's home office equipment. You use a printer to print out the invoices that you never sent via Cash App, but that's none of my business. Maybe you had a scanner that you used in order to scan in beautiful images that you use on your website. And maybe you use your cell phone. Of course you use your cell phone because that's where your transactions existed. So you use your cell phone to transact business. So not only the product of the phone, but also the service to keep the phone activated. Shout out to those of you all who have Verizon because Sprint works where? Nowhere. Okay, I know that was all shade. But maybe all of these expenses add up to you having a lower or no taxable income. And that's the way that it works, right? The way that it works is for you to find as many losses as much or equal to the income that you earn. Now, usually this is great during years where you're not looking to buy a home or looking to buy an investment property. So those were 3 legitimate ways to use the TSOs. Remember, these are TSOs. To use the TSOs in such a way where you can tell Uncle Sam, keep your hand out of my pocket. Keep your hand out of my pocket. And also how you, as an entrepreneur, as an entrepreneurial person, or as anyone who is transacting business, if those are terms that you don't like, these are ways for you to keep more cash in your pocket and less cash going to a government that is taxing people who absolutely need that income to pay their bills, while folks who are billionaires and millionaires are paying $0 to only a few $100s to the tax man. Make sure to follow my YouTube channel. If you haven't already, hit the like button with your finger. Kiss it with your finger. And also hit subscribe.
All right. Hold on, guys. Okay. Okay. So, there you have it. Right to the conference. And I think that's pretty much it. I think I lay out all the information. One caller called it, and I guess no one else has any questions or anything on to this subject at hand. So, in closure to this, and before I close this, I'm going to say this. The tax codes and the tax reform is always being revised, re-updated, and looked at every 30 years. And one thing I did forget to read was, I'm trying to find out, I wish I did highlight it, during World War II. Let me see if I can find it right away. Now I just remembered. Now I have to read this part. This is very important. Because what happened in World War II was very pinnacle of why we looked at why the government is stepping in about taxes. Found it. This is the last time I read, and I probably will get my closure. In the same book I was reading, y'all. And it says here, there we go. This all changed after World War II. The government of the world found that the income tax was a useful revenue-raising tool that could be used to rebuild an economy that was ravaged by war. So the government began taxing the middle class. At first, it was only the excess earning by employees over the average cost of living that was taxed. The government provided exceptions for the first income earning so that the average person could live on their regular earning and only pay tax on the excess that would otherwise go to investment. As they watched the behavior of people who were now paying income tax, the government began to tinker with the tax law to see how it would affect the activities of taxpayers. What they found was that a minor change in the tax law could have profound effect on the behavior of people. If the government gave a tax incentive to investors in business, more people would invest in business. If they gave a tax benefit to those who invest in oil and gas, more people would invest in oil and gas. And so the tax law grew from a simple revenue-raising vehicle to a vast array of laws that govern the economy activities of the land. And so it is today that the tax laws of every country are modified as the country or as the economy change and as social policies change. And that's the reason why taxes were changed and looked at and was brought by incentivized after World War II. And during that same World War II, America became the powerhouse as it was, as you see, present for now, while still holding on to the power. And that is that fiat currency we call the dollar bill, which right now is a depleted resource, and the only thing holding it up is, let's be honest, military. So knowing that every 30 years they change it up. And I would have to say this one that was changed and put through 5 years ago did include this, in my opinion, and I will say it with a straight face, that bill was also put in place, that was placed years ago when the Trump administration reformed the tax law. Because remember, in the tax law, they gave out, if there's real detail, and I know it's thousands of pages, they did, in my opinion, include it the same with the digital currency and tax people and giving where they have to pick which they should start taxing the small people that either the small business owner or those that's collecting money hands and fists digitally. I wholly believe that was put in that bill as well, because everything has to be reformed. Everything has to be given an incentive at the end of the day. So, in wrapping up conclusion, what's one thing we could learn from this? One thing you can learn is you must understand what are taxes and benefit and make a benefit out of you, how you could thrive under these taxes. And we as people and as Americans, let's be honest, we gotta stop running away from taxes and be afraid of it. If you're not gonna not pay no more taxes, and trust me, the American people could do that if they do it in mass numbers and in large percentage if they choose to. But other than that, most people, let's be honest, they just want to work and pay bills and pay taxes. That's the way the law and land works. And you're not going to see much people give up or escape that or say they're not going to do it anytime soon. So, like always, it's very much, it would make better sense to learn tax law and try to benefit out of it so you pay less taxes. That's the only way you're going to really keep money in your pocket and really cut back on losing the little wealth you are gaining if you work in a job or business or etc. That's the only way around it. So for those that get mad and scared and all that stuff, I would say keep doing what you're doing. Don't fret. Keep doing what you're doing. And just learn ways to get around it and pay less taxes. That's the only way you're going to get around it. I would say there'll be an easy way to get around this, and so there's a real solution, but there's not. For now. But really, truly, I think that's the best way to go. And that is it. I hope y'all learned something today on today's stream. I hope you find this stimulating. I hope I was able to keep your attention span, because the whole purpose of Chaos Rain Channel is to raise your attention span and make it past the 5-second threshold, because God knows your threshold of retaining and understanding and keep your attention span, it exceeds beyond 5 seconds to things that has no prevalence or relevance in your life. I know you can do it. So stay well educated, stay abreast, and always grow. And that's it. I'd like to thank everybody for listening to today's broadcast. Like always, follow me on YouTube, Chaos Reign. Make sure you hit the red button, top bell for notification for uploads of future and live streams. Also, you can follow me on Twitter at ChaosReign7. And now you can add me as a friend on Facebook, Eric Reign on Facebook. Thank you for listening to today's broadcast. Until next time, take care and good night.